Hey guys, this is Andrew from Dividend Growth Masters, and today I want to talk about analyzing cash flows of companies you want to invest in. Now, obviously, in late 2022, early 2023, cash flow should be really important when you're analyzing companies because we're basically in an economic recession. And when you have revenue dropping for some companies, cash flow becomes a lot more important, especially how much cash you have on the balance sheet and how much debt you have on the balance sheet as well. So we're going to look at all of that for Coinbase. So here we are in the SEC Edgar portal, and we're going to look at their latest quarterly report, their 10Q, and also their latest 10K, their annual report. So what's concerning about Coinbase is the significant drop in revenue for not only the 3 months ending September 2022, but also the 9 months as well. So if we look over that time frame, revenue basically dropped in half from 5.3 billion to 2.6 billion. Now, obviously, that's kind of expected given the current situation in the crypto market. So the drop in revenue that they're experiencing shouldn't be that much of a surprise. Obviously, they make their money off volume from the trading fees, but still, when you have a significant decline in crypto prices, they're obviously going to get hit hard. And as you can see, for 2022 so far this year, they haven't reported Q4 results. They'll report it next year in 2023. But for the 9 months ending 2022, they lost $2.1 billion, which is actually a lot of money. Now, the more concerning thing is what's going on with the cash flow statement. Because when you're reporting on the income statement, you're doing something called accrual accounting, and that's not necessarily the amount of cash flow that they're generating or losing in a current quarter. So that's why you have to look at the cash flow statement as well. So if you look at the statement of cash flows, they're basically reconciling between their income that they reported on the income statement and their actual operating cash flow during the quarter. So you can see they actually, for the 9 months ending September 30th, 2022, they actually burned 4.8 billion in cash flow, meaning they lost 4.8 billion. And you can see the drop off in cash if you look on the balance sheet as well. But this number is definitely very concerning because this is the largest operating cash outflow that they've had, and I think in pretty much their entire history. So if you go to their 10K and look at their operating cash flow, you can see that in 2019 it was negative 80 million. 2020 things were good; it went up to 3 billion. And 2021 it was very good. They made 10.7 billion in cash flow. And obviously, so far in 2022, it hasn't been that good. They lost $4.8 billion. And you can see that with the drop in cash too. If you look on the balance sheet, they started the year 2021 with 7.1 billion of cash, and now they're down to 5.0 billion in cash. So basically, if they continue this for another year, they could potentially be running pretty low on cash reserves on the balance sheet. Now, obviously, there are things that they can do to reduce the amount of cash burn. One is they can cut back on spending. I believe they've announced layoffs, or I'm pretty sure they will as well. So that'll help the cash burn. But obviously, burning 4.8 billion in cash flow is a lot, considering they only have 5 billion in cash on the balance sheet. Now, the company did discuss this briefly on their Q3 quarterly conference call. So if you read this quote from the conference call, it basically said, "We did in Q3 of 2022. with 5.6 billion in total USD resources and 480 million in crypto. So over 6 billion in combined crypto and cash resources. And on our operating side, as I mentioned earlier, we reduced our operating expense by 22%, excluding impairments. So basically, they're saying that they have about $6 billion in cash and other resources to fund the company. And they've been reducing their expenses pretty significantly. 22% is a lot. Now, the concern here is obviously they're burning a lot of cash, even though they have, say, as they said on the conference call, 6 billion of available cash and other resources. But they're burning 4.8 billion. They're burning 4.8 billion in cash flow, and that's a lot. Even if you reduce that by 20 or 30%, that's still a lot of money that they're burning. Especially since I don't think the crypto market is going to recover significantly within the next 6 to 12 months. And not only that, I think they're facing a lot of issues with regulatory compliance, especially with the fallout of FTX. So I think that their regulatory expenses are actually going to increase a lot. Things like compliance, new laws and regulation, hiring attorneys, lawyers, and that sort of a thing. So I think it's going to be actually really hard for them to be able to reduce their cash burn and their expense rate in this environment. So the good thing is that, well, let's talk about the debt on the balance sheet. So they do have long-term debt on the balance sheet of about 3.4 billion. Now there's more disclosure about this in the 10K, so that's where I'm going to look. So most of the debt that they have on the balance sheet are convertible notes. So let's go to the footnotes about the debt on the balance sheet. So they have convertible notes due 2026, 2028, and 2031. So it's late 2022. So basically 2023. So it doesn't look like there's any near-term issues with the debt becoming due, and the interest rate is actually pretty low on this debt too. It's less than 1% for the 2026 notes, and it's 3.5% for the 2028 notes, and the 2031 notes are under 4%. So the interest rate is pretty manageable. Total interest expense that they're running on this is only 29 million per year. So on the convertible notes and the senior notes as well. So there's not a ton of issue with being behind on interest payments. So that's the good thing. But as I mentioned before, they only have about 5 billion in cash, and they're burning a significant 4.8 billion to be exact, a significant amount of cash. So it is kind of concerning, and they should report results. When did they last report? I'm guessing they'll report sometime in late January or February 2022. So we should see what the cash flow is going to be like in the fourth quarter of 2022. So that'll give us a little bit more of an indication of the trajectory and the trend that's going to be happening. But that's kind of a high-level overview of why you definitely want to pay attention to the cash flow of companies, especially in this operating environment.